In the meantime, let's bring in Erica Payne, founder of the Agenda Project, and Mark Manson, founder and CEO of Manson Money. And Mark, do you think that business leaders can break through China's Great Wall? I mean, the stealing of intellectual property, for instance, it's been going on for decades.
You know, the first rule of negotiation is to know who you're dealing with. Look, you know, President Hu, I can't believe I'm saying this, but I actually agree with Harry Reid on this. President Hu is a dictator of a communist government. And what that means is last year they killed between 5,000 and 6,000 of their own people without trial. That's more than any other, the whole rest of the world combined. They do abortions with women who have second pregnancies. These people, I ask a rhetorical question, do these sound like people you can negotiate with? We've been asking them to break down free trade. We've asked them to stop devaluing their currency. We've been asking them on human rights, and we've been asking for over 100 years. It hasn't worked yet. To me, this is nothing but kabuki theater and a dog and pony show. These deals were going to happen anyways. So I'm not looking for any magical miracles to happen out of this thing. This is just a PR stunt in my opinion.
Well, but Erica, there are specific things on the agenda this week for the Chinese president. And in particular, I mean, he mentioned human rights, but it's also the issues of security. It's also the big issue of the trade imbalance between the two countries. All of that will be discussed with the president of China, Erica, but will they listen? Do they really need to listen to anything we have to say?
Well, I think the fact of the matter is we're the largest economy in the world, and China is the second largest economy in the world. And so there is a win-win that can be developed here where we can trade goods and services back and forth. What we need to keep in mind, though, that is in order for that to happen and in order for Americans to be as competitive as we know that we can be, we've got to set a playing field that is more balanced than it is now. And so that'll just go through a series of negotiations. The feeling that I have right now and that I think is expressed, you know, throughout the business community is that we're not on a level playing field. We're not in a place where we can compete. And a lot of that is because of some of the deals that have been structured, because of how China deals with their currency. But we also have some bigger problems in that, which are we're not investing in our infrastructure. We're not investing in education in the way that we should. So they are also actually out competing us.
Well, I don't know so much about that, but I want to bring in Rob Basso into this discussion because a lot of these big companies that are coming in and cutting these deals this week, and Peter was just reporting on it, Alcoa, American Electric, Duke Energy, GE. What is to stop the Chinese from doing what they've been doing for 20 years? And that's take our intellectual property, learn from us, do these deals, copy what we give them, the technology, and then use it to compete back against us. They've been doing this for years.
The short answer is nothing. China is a sovereign entity. They're a sovereign nation. And I think that we shouldn't be so bold to think that we can tell them what they need to do. They're acting in their best interest, just as America is acting in its best interest. The whole concept of this indigenous innovation to keep investors to use their money and spend their money inside China is what America has been doing all along by adding tariffs and things in history. If you look back over our entire history, we've used some of the same tactics, maybe not so strong-armed as the Chinese are doing now, but they're protecting their own interests like we're trying to protect
they're becoming the top trading partner to other countries throughout the world. It's not just about the U.S. and China anymore, Lizzie. It's about China and India. It's about their control of Taiwan, their occupation of Tibet.
Yeah, I hear what you're saying, that there's been a lot of saber rattling in China. But look, I'm talking to a lot of guys on Wall Street. They feel that China is a black swan event that could be coming down because they're in a massive bubble. Their monetary base is about 20% larger than the U.S., even though their GDP is 2/3 the size of our economy. And their bank loans, they've got trillions of dollars more in bank loans on the books than we do here in the United States. So I'm not so sure if we're dealing with a true tiger or a paper tiger in China. And China, by the way, their GDP per capita is on the level of Angola. Their purchasing power on the individual level is very small. There's not a lot of wealth creation on the individual level. 600 million people earning, what, $6 a day. So the fact that inflation is bearing down on China right now, China is battling poverty and inflation in its borders. Its infrastructure build-out has created ghost towns and empty strip malls. So is it in a bubble? Jimmy Chano says that. Hugh Hendry, a famous UK hedge fund manager, says that. Is China a black swan event that could be coming down? If it blows, what will happen to our markets here? That's what serious people on Wall Street are talking about.
And Mark, she brings up a great point, and she's right in that many of the smartest folks in the room in this country, many economists say that the Chinese economy could be a threat to the U.S. economy this year.
Well, because of that very reason, we have less than 1.5% of our portfolios in China. Even though you hear so much about it, is this emerging tiger, as she pointed out. And this is exactly what happened to Japan in the 80s. You know, everyone talked about their centralized planning and how they were going to grow forever. And these communist countries, long term, you don't have to worry about competing with them because they blow up under their own steam. Centralized planning does not work. What we have to do with China is stop taking their dirty money. We need to get our own financial house in order. You know, we owe them $900 billion right now, over 6.5% of our $14 trillion. Get our own house in order, get our debt down, pay them back, and then innovate like crazy. The reason they're buying those products is because they're innovative products that they're signing those contracts with entrepreneurs and big companies. We need to focus on our own backyard. China will take care of itself.
Erica, last word before we go to break. Erica, I almost think you're going to agree with Mark on this one. I mean, hold the room for a second, but you two might agree on this point.
Well, if Mark's agreeing with Harry Reid, then we've definitely hit a brand new point in our conversations. But where I would definitely agree with Mark is that we need to focus on innovation. And an international test just came out that showed that China was #1 in science, math, and reading. And the U.S. ranked around 23 or 24. There are some things that we need to do to get our house in order so that we can build that innovative economy, like Mark said. So we'll agree on that.
That's right. All right. Well, good. I like this. Now, you may not agree on this next topic. We're going to take a break. When we come back, you're both going to stay with me. Erica's favorite topic, folks, is Lloyd Blankfein. A rare miss for Wall Street's golden boy. Is Goldman Sachs losing its touch? Erica and Mark are going to stay with me for this heated debate continuing ahead on the only business network in true HD. Take a look at Goldman Sachs stock right now. It's down 439.
What's going on? What's going on? What's going on? Yeah, what's going on? What's going on?
City, it was Goldman Sachs' fourth quarter numbers. Their profit plummeted 52% versus the same period back in 2009. The firm once again blaming poor results in investment banking and fixed income, currency, and commodity trading. Earnings coming in $3.79 per share versus $8.20 per share back in the fourth quarter of 2009. Liz McDonald has been all over the story. You're great at these balance sheets. What stood out to you for the quarter?
Well, what stood out to me for the quarter was the fact that their powerhouse unit, the fixed income, commodity, currency, and trading unit, was down 39% quarter to quarter from the third quarter to the fourth quarter. These are the powerhouses for Goldman Sachs. Goldman Sachs is supposedly the most powerful investment firm on Wall Street, but Cheryl, is it losing its shine? And you see investment banking lagging as well. And at the same time, we see their compensation pool and their benefits pool hanging in at around $15 billion. That means about $431,000 per worker. It's still at the second lowest level it's been since the crisis began, but it's still hanging in strong. In other words, they're still setting aside money, and the amount of money they're setting aside is not as much, has not dropped as much as the revenue drops in the units. So that's an interesting point. And the other point, too, $45 billion still in rotten assets on the balance sheet that are just tearing up and shredding their tangible common equity, meaning their net worth on a hard asset basis. And that's how the firms ought to be valued. They are having a difficult time, only down by $1 billion. Goldman Sachs having a very difficult time getting rid of the rotten assets, the level 3 assets on its balance sheet.
And then again with the trading revenue numbers. And Lizzie, you know, from fourth quarter earnings and the plunge at the company to the scrutinized $50 billion Facebook deal, I want to find out if Goldman overall is losing that golden touch. Erica Payne and Mark Matson joining me once again. And Mark, I do want to hit you on the numbers really quick with this. I mean, obviously the Facebook deal has been controversial for Goldman Sachs, but overall, do you think that Goldman is losing its touch, so to speak?
Well, I'm going to give you the money manager's perspective on this. This is still a $78 billion market cap company. They made $2 billion of profits last quarter. You know, a lot of companies would love to be in that category right now. And we measure distressed companies by their book-to-market value. And what I mean by that is if a company has a lot of assets in a small price, then they're distressed. This is not the case here. Their book-to-market value is 0.77 compared to our value in our portfolio is 0.95. So this company is a long way from distressed. The Facebook deal was unfortunate, but think about the unintended consequences of the SEC regulations. Right. I mean, here you have a company made in America for Americans, global, and now you can't invest in it because it had too much hype. Sad story.
What do you make of the Facebook side of this, Erica? I'm sure you have an opinion about it.
Well, the Facebook thing was obviously a blunder, but I think we need to take this, oh, woe is Goldman Sachs idea and just take it down a notch or two. Goldman put out a lot of their compensation in December of 2008 in stock. They did substantially more stock compensation to their senior level executives than other companies did. That stock price has gone from around 78 to around 169, so their executives are doing just fine. As Liz said earlier, their average compensation, you walk into Goldman Sachs, you make $450,000 a year, basically. And and so I just am not going to cry me a river for Goldman Sachs anytime soon.
I didn't think that you would be, Erica. Actually, I know you too well. Real quick, Rob Basso, last word on this one, the Facebook deal with Goldman. You concerned or you're not bothered by this?
You know what? I'm not really concerned. I think the reality is the American public is disappointed that now we've lost the opportunity to invest in what really has become one of the most well-known companies in the entire world. But there's clear-cut rules. You're not supposed to advertise private offerings. I don't think they did it intentionally. How can you possibly hide
We were leaking.
Facebook?
Somebody was leaking to the public.
Hey, I got called from some of my local guys talking about
But now
the deal,
is this jurisdiction shopping where they're going to go overseas where the regulators aren't that
I don't think they should
have
be.
a long time to go before a Facebook IPO. I have a feeling that we're going to.
I don't think they should be beat up unnecessarily.
All right. Mark Madsen, founder and CEO. Madsen Money, Erica Payne, founder of the Agenda Project. Thanks to both of you. It's always great to talk to both of you on many topics.